Hi, welcome back to the channel. This episode, I'd like us to talk about two companies in the same industry, the same telecommunication, entertainment, service provider, and more. This industry, these two companies are actually giant in the industry, and I am talking about At&T, ticker T, and Verizon, ticker VZ. Let's start with At&T. At&T declared the earnings, their Q4 earnings last week, and the stock dropped about 10% on the topic or the issue of Warner Media merger discovery. The CEO actually put a rousy statement on that. However, the stock is at a good price. I've added to my position on the stock. A lot of other big investors, companies have actually added, insurance fund managers, or they've added more to their position. The price as at close of Friday is $25. The PE ratio is actually very reasonable. It's about 9.3, and then the market cap is about 180 billion. On the other side, the Verizon, the two of them are actually dividend paying stock. The dividend for At&T, a lot of people rely on that dividend because they actually pay dividend and is known for a dividend paying company. Verizon, on the other hand, Verizon P ratio is also about 9.9 or so. So the P ratio for the two companies are actually equal in a way. The market cap for Verizon, it's about 220 billion, while the price as at close of trading on Friday, it's about $52. So Verizon is more, you cannot say it's more expensive or cheaper. It depends on what you're looking for. It depends on the valuation method you're using to value both of them. It is up to you to check which one is good for your portfolio. However, for us at Elite Pro Investment, we have Verizon and we have At&T. We have them for different reasons, but both of the reasons we have them are also for dividend. They are paying dividend. What we will do now is we will take a look at the chart. Let's see whether we can get any price action information why the price of At&T dropped after the earning declaration, and let's see on the price action to see why, if you can get any information why Verizon is almost double the price of At&T. So we are looking at Verizon ticker VZ. Verizon, as at the close of trading on Friday, January 28th, it closed at 52.90. After hours, 52.99, 0.09 up. That's after trading hours. 65-day volume is 22.3 million. Market value is market cap is 222 billion. Shares outstanding 4.2 billion. The P ratio is 9.95. It's a dividend paying stock. So the latest dividend is 0.64 cents. Let's look at the peers, the stocks or companies in a group, the competitors. Let's put it that way. Okay, well, Apple is stated there because of their similar things that they do in common. At&T, T-Mobile, this one I know. At&T, yes, and that's the other company we compare to them. US Cellular Corp, telephone and data. Let's look at the finances or financials. Okay, let's go back to overview. Let's see what other information we can get. There are different news that you can read about him, about Verizon. Okay, we have seen this information. Verizon Communication is an holding company which engages in the provision of communication, information, and entertainment product and services to consumer, business, and governmental agencies. It operates through the Verizon Consumer Group and Verizon Business Group segment. The consumer segment provides consumer focus. You can read more. Um, Look at the chart. This is a more professional chart, and but we will go on to more chart to see candle chart, price action, to tell us what we're expecting in next trading day, or whatever information we can get technically from the daily and weekly chart. However, this shows that it's on a uptrend, but that the other chart will give us technical information, more information than this. So let's go on the financials. You can also read a lot of information. Okay, the income statement for Verizon. This is the last 5 years income statement. 2017, 126 billion. 2018, 130 billion. 2019, 131. 2020, 128. The I would say due to lockdown or whatever. 2021 133 billion. So it's an upward trend for, but you can see that it has been consistent, really consistent in that range of amount. Let's see on the balance sheet. Let's see what their total liabilities will be on the balance sheet. Let's see cash and short-term investment. Okay, maybe they make acquisition or whatever investment they did. Excuse me. But let's see the total liabilities. Total liabilities. I like to check the total liability to see if this company is acquiring more debt on unnecessarily debt than required. Into okay, 212 billion, 210 billion, 222, 247, 283. Well, it has been consistent and there's an increase here. But why? Maybe an acquisition was done, or maybe, it depends on what they use the money for. But let's look at the free cash flow. Let's see whether it's also a growing trend or consistent. That way, we'll be able to judge. You know, guys, you need to make your own valuation. You need to all this that I'm doing is just a part of my own metric to to consider within two different stocks and see which one I'm going for. Well, we have these two stocks I have in my personal portfolio and in our funds. So let's look at free cash flow. You can see that the free cash flow actually grew from 8 billion to 17 billion, 17 billion, 23 billion, and 19 billion. So the difference, as I as we saw in the liabilities, but you can see, I mean, this is a bar chart that shows the trend. So guys, let's have a look at AT&T, ticker T. Okay, we are looking at information for AT&T. I mean, the graph though looks alike, but we cannot tell until we check. We do that on Momo to see the candlesticks, see price action, what we can get. But the chart uh, appears, similar. As a close of trading, it was $25.21. Now it's to $25.22, 0.01 up after hours. The volume traded in the last 65 days is 58.18 million. Market value 180 billion, lower than Verizon. Shares outstanding 7.14 billion. P ratio is 9.3. I think that of Verizon is about 9 point something as well. So similar P ratio. On the peers, those are the stocks in the same group: Netflix, Walter Disney, Comcast, Verizon that we just did, Verizon. So you see, these are the stocks in the same category. Um, Let's look down to the financials for AT&T. The financials, this is the last 5 years, ending at 2021. Income statement from 160 billion, it grew to 170, 181, 171, 168. The difference around there might be due to the lockdown, but you can see it's rather more consistent. Can we go to the balance sheet? Let's see the total liability to their total liabilities. I like to see that figure. There's a metric that I normally use, total liability to free cash flow. Now we can see the total liability. Wow, is a huge. Total liability there is 302 billion, 337, 349, 346. I mean, this is huge. And here, okay, let's see what happened here. Have they paid? Have they made repayment or why? Okay, maybe this information is not available at this time. Can we check the free cash flow? See, yeah, I think the information is not available. 21 is not available yet. They've not. The earnings were just last week, so this information was not uploaded yet. Let's see total free cash flow. This is the cash flow in their statement in their account, that the money they can use for absolutely anything. Free cash flow from 16.4 billion, 22.3 billion, 29.3 billion, 27. It was growing, and then it stepped down. This is not available yet. So, well, guys, I have an Excel sheet which I will put on my page. You can download the Excel sheet. It is to calculate total liability to free cash flow ratio, to tell you the numbers of years for if this company wants to pay their debt with the amount of cash flow, total free cash in their on the balance sheet. How many years will it take them? That is exactly what the total liability to free cash flow ratio calculation is. Let's go back to the fundamentals. A lot of investment fund managers and all that have bought the dip on AT&T. The stock actually dropped about 10% or 15% more. So we are looking at Verizon, ticker VZ, Verizon Communication. What we can see here immediately, let me just draw some support and resistance that I've seen. This is support here, was the resistance that was broken that became support, and there's another resistance here. This truck has been choppy lately, very choppy lately. I have it in my portfolio, so I know it has been choppy lately. Um, okay, I wanted to draw another support here. Okay, so what we can see here now is that it's on a support here at 52,900. I've had this stock for over 2 years now. I bought it after the lockdown. During the lockdown, during the lockdown. But in the last 1 year, this stock has not gone beyond 58, within 52, 58, 55. It has not performed at all. On the weekly chart, we can see that the 200-day is actually it came below 200-day moving average about some days ago due to the correction, and also the 20-day moving average is actually below the 50-day moving average. So this, we can call this consolidating around here. It has actually been ranging between this 50 and 55, has been ranging within um, that 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 range. Let's look at a daily chart for Verizon.
coming up. On the daily chart for Verizon, we can see just draw quick support here. So it's actually about to break this resistance up. If we break this resistance up, we are looking at about 55 again, and there will be another resistance there that's reached there before 54. Yeah, that has been doing that. And also we can see that recently broken this uh, resistance this point. So we can, this actually shows that it's actually on an uptrend now. Verizon is on an uptrend direction. 20-day moving average has crossed over 50 days, and they're just about to approach the 200-day moving average on a daily chart. Verizon is a dividend paying stock like the counterpart At&T. So it is up to you to see uh, whether the two of them are good for you or either of them. You know, it is up to you. We have actually checked the fundamentals and financial details. These are the technicals, so you can put them together, see, and carry out your own valuation. For so far, so good on the technical details here. We can tell you that this is going on the uptrend, and this candle is an anchor candle. This is a huge candle. We expect the upside on Monday when trading commences. So this is what you will see. Can we now check for AT&T? Because AT&T is loading. My network is a bit slow. Okay, it's here. So quickly, I'm drawing the resistance that I've seen here now. I would say it's actually just about to, this stock is trading below 200-day. Okay, it's actually just below 200-day moving average, below 20-day and 50-day. Obviously, the 20-day has crossed over 50-day. This is a daily chart. It's actually on 25. There's a resistance here. This resistance, hopefully, it will be broken in the next trading day. Actually, AT&T, this long sell candle, this red candle that you see, it was after the the earnings was declared, and the information that the CEO gave concerning the merger with Warner Discovery, scenario. I I think the CEO shouldn't have made that statement on the earnings day, on the earnings call. But then this is where it has given opportunity for other investors to buy in the dip. And I can tell you, recently, the last 48 to 72 hours, a lot of investors bought into AT&T. AT&T is a dividend paying stock, and that is what is known for. So if your strategy is a part of buying a stock that has dividend, then I mean that pays dividend, you can consider AT&T. It's what I'm looking at here again. Yeah, I'm looking at like a double bottom, which here and it goes up here. But then where we are now, we should expect an uptrend. Maybe the next stop will be about 27, which I think it's not far fetched for AT&T. Check your valuation to see in between Verizon and AT&T to see which is good for your portfolio, which one is for your finance. Yeah, this is all about what we can see on a daily chart. Let's look at the weekly chart. The weekly chart isn't any different. We can see here this support was broken and this resistance, still here. It's about to, get to that resistance to, I mean, that will be the next stop from 25, 27. Let's see the percentage it has actually dropped from the recent high, which is 33,891. The percentage it has dropped is about, let's see, okay, it has dropped about 20, is it 20, 26%. Has dropped 26% from the recent high. The recent high is actually 33.81. So yeah, that you also need to put into consideration. Um, Aside from that, I think we are good. Um, Obviously, this was as a result of the earnings. As a result of the earnings. So we have checked the finances, we have checked the fundamentals, and this is technical.
We have looked at the chart. We have seen the price action. We have looked at the financial statement as well. It is now up to you to see and evaluate if Verizon is good for your portfolio, if AT&T is the one that is good for your portfolio. We have both stocks in our company at Elite Pro Investment Management. I have AT&T in my own personal portfolio, and I have added more. So, but for you, you can do your own valuation. See if it's good for you. Thank you for subscribing to our channel. Thank you for watching this video. We will continue to give you value for your time. We will continue to create and analyze, companies and give you a tip ahead to see whether you should put it on your watch list, and we will tell you if we add the stock to our own portfolio. The most important thing is that we appreciate and thank you for standing by our channel. Thank you.